Hey everybody, welcome back. I'm Rob Booker and welcome back to the channel. And this is our weekly preview video sponsored by IGUS, a leading Forex broker. Check the link below. Open up an account, takes 60 seconds. All trading involves a substantial risk of loss and is not suitable for all traders. I can't give you personalized trading advice. And this is generalized market commentary designed to set the stage and give you insight into the most important economic stuff coming up next week. So next week, what do we got on the calendar here? We've got NAB business confidence. I literally don't even know what that is. We've got Chinese consumer prices. That could be fairly interesting, but not really tradable. We've got my favorite name of any economic report in the world is the ZOO. That's the German equivalent of how good is the economy doing. Das ist good, I guess. I don't even know if that's right. We have CPI in the US on the 10th of March. Labor Department, blah, 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 PPI, producer prices. And then Thursday, the ECB rate announcement. Gosh, are we even gonna get all the way to Thursday for the European Central Bank to what, lower below zero the interest rate? I expect that we're at zero now. You could probably expect coordinated intervention by the world's central banks to do something about the stuff that you see going on right now. The big winner, strangely, over the course of the last few weeks has been the Euro Canadian. I mean, this is an incredible, look at this move. It can't even fit on the chart. These beautiful charts on the IG web-based platform. I love it because wherever you draw the lines, they show up. Look at what's going on here. The Euro Canadian, so the Euro has become the new yen. It's a funding currency. With interest rates at zero, you borrow money in Europe from some giant French bank as a hedge fund, and then you deploy that capital and you buy British real estate or stocks today when they're super cheap. And that's what happened is the Euro became a funding currency with low interest rates. But when the market crashes, those stocks get sold and those loans get paid back. And they get paid back in euros. And so you see the euro crush it. And so it's strange that the European economy is potentially one of the weakest in the developed world, but the euro is doing well. And it took a lot of people by surprise. It became super confusing for a bunch of people, but it makes a lot of sense when you think about the fact the currencies of the world now go up if low interest loans are getting paid back. That's why the yen appreciates in times of financial crisis, because people are paying back low interest rate loans made in Japan that were used to buy stuff in dollars and other currencies. And right now the euro is climbing for that very reason. The Canadian dollar is weakening because oil, in a time when people aren't leaving their homes or flying on airplanes, oil has gone down. The demand for oil is expected to be the lowest ever in the history of the galactic universe. I don't know how long, but I read some headline. But look, airlines are losing money. People are not traveling as much. Oil has gone down. We're going into the summer months. We're not heating our homes. Listen, so that's why, and the Canadian dollar is so tightly correlated with oil. That's why you've seen this go up. Now, why do I say all this stuff? Because I'm looking for some kind of reversal pattern so I could potentially sell the Euro Canadian. Because I think when something goes up this far, this fast, it has to potentially drop as well. That's why you've seen currencies like the Euro Yen not really go anywhere. It's because it's like two types of peanut butter fighting against each other. They're the same. The Euro and the Yen are essentially now the same currency. They're essentially funding currencies that do well in times of crisis, so they really haven't gone anywhere. The other one that I've been looking at so much lately, you know this, is the Australian dollar. And what's been fascinating is we've kind of thought we might see the Australian dollar, New Zealand dollar put in a low, and it seems to have done that. It seems to be rounding out, and it's got levels going up pretty substantially now. So I'm looking for a break above, like $1.0550, well above the recent highs that it made. But if it breaks below $1.03, then I think this is it's going to be hard for this to recover. Remember, Australian dollar is super tied to precious metals and gold and rocks. And so it should do well in times like this. And the New Zealand economy is heavily dependent on exports and milk and like lamb meat. So it wouldn't surprise me if New Zealand does a little bit worse and Australia does a little bit better leading into all of that. Thank you so much, IG US, for sponsoring this video. I'm Rob Booker. Take a look at all the other videos on the channel. Hit the subscribe button if you want to get more stuff like this on a regular basis, plus commentary and much, much more. Thanks again, everybody, for watching. I'll see you next time.